What's up, guys? It's me, Juan, Pablo from 100% Finance at 100%finance.com. Mr. Cash Flow, Mr. Passive Income, the people's mentor. I got what you need to succeed. The topic of discussion for today is why I prefer to invest in real estate over cryptocurrencies, right? So I know there's a lot of discussion about the cryptocurrencies, Bitcoin, for example, that, oh, we got this fairly new, fairly recent asset, right? And a vehicle, sort of say investment vehicle, in which you can apply the buy low, sell high model. You know, you can hold it for a while, see it grow, then perhaps cash out your investment and make a substantial profit, capital gains. So it sounds cool, it sounds pretty sexy, because it's like, wow, we don't know where the market's going to go with this, you know, how it's going to turn out. But I still prefer to invest in real estate over cryptocurrencies. And why is that? Well, before I get into that, let me share with you a little bit about myself. So I'm Juan Pablo. I'm a full-time real estate investor and online entrepreneur. So of course I have some bias because I do invest in real estate full-time, which I'll explain to you why in a few moments. And I quit my day job via investing in real estate at 30 years old. I bought my first property at 26. So that was my start with a 2-family, a 2-unit, duplex in other words. And I quit my job 4 years later at 30 with 30 rental units in my portfolio. Rental properties, okay, just to be more specific. And then I continue to invest into, you know, now I'm 34 years old now. So I've been without a 9-to-5 on purpose. I actually wrote a book about it, Quit Your Day Job. Just check the links below to learn more. And I now have 72 units, rental units in my portfolio. And the reason why I love rental units is because, well, I get into the topic now, okay? So that's a little bit about myself, okay? There's a lot to share with you that I am credible to provide you with some insights to why I prefer real estate over this new, or fairly new, investment class. Real estate is the ideal investment. Ideal is an acronym which I'm gonna break down for you. And this may provide you with some insights to why I love real estate. The I in ideal stands for income. Real estate, first and foremost, provides passive income. What's passive income? It's income that you receive on a consistent basis with little to no work required, like rental income. As a tenant, how often do you contact your landlord? It's fairly rare, as long as the landlord provides you with a proper property that's in good shape, up to code in other words, and he has great systems in place, meaning he tells you, how to pay the rent. If there's a work order required, you submit it via this way. Generally, you rarely contact your landlord. And if you have property management in place, you have them deal with the day-to-day operations. You just touch base with your property manager and or your partners perhaps once a month at most, okay? So it's little to no work required after you buy. And that little to no work required produces passive income, cash flow, in other words, in which we have the Cash Flow Academy, which I'll share with you a little bit later, which teaches you the ins and outs of real estate investing, especially how to get started. So I get that question asked so often. So being that I keep my ear to the streets and I connect with a lot of people from YouTube, since we have close to 50,000 followers on YouTube, Facebook following, Instagram, LinkedIn, email. I get a lot of people reaching out. We do events. I'm a national speaker, and so that's been one of the main concerns people have been asking me. How do I get started in real estate? And so that's why I created this new coaching program, a series of modules and resources that teach you specifically what you need to do to get started. Okay, so being that it's the ideal investment that produces cash flow, again, the cash flow coaching program, that will afford your living expenses. So that way, if you have passive income coming in, you can do whatever you want with your time. Because most people say, well, I can care less about real estate. That really doesn't turn me on. I don't have an affinity for real estate. That's cool. Many of my investor buddies, even my mentor personally, has no affinity for real estate. His main thing is music. He has his own record label. So he has a creative mindset, and he can care less about real estate and properties and tourists, tenants, and taxes and all that stuff. But he does understand that it's a valuable asset because he uses real estate investing as a muse to afford his lifestyle, and you can too, okay? So it produces income so that you can do whatever you please with your time. So if you want to start a record label, then do it. If you want to give back with your time, you want to be a philanthropist, you want to travel the world, you want to start some nonprofit, you want to start your own business, a lifestyle business, you can do whatever you want. And that's what I did. I obtained enough rental properties so I didn't have to work. And I said, you know what, I want to give back. I want to be able to teach people how they can do the same thing, how they can, it's the tagline, earn passively so they can live passionately. Live their passion, and my passion is teaching. That's why I do all these videos, create these programs, so that you too can live the lifestyle you want to live. So income is the biggest thing. Now, if you do cryptocurrencies, does it produce passive income on a consistent basis? Does it give you a check, like tenants give you a check every month, month by month? Do cryptocurrencies do that? See, that's the question. Now, the next reason why I love real estate outside of the income is the depreciation. Depreciation is a phantom expense when you file your taxes that reduces your tax liability. Because when I buy a property, whether it's residential or a commercial property, I normally focus on commercial, but of course I got my start in residential, and I teach that a lot in the Cash Flow Academy, how to get started in residential as well as commercial. And I love commercial because it's less stringent where the underwriting is concerned, we're getting qualified for a loan, and it's just easier. They're not as nitpicky as residential. When you do residential, the mortgage companies, 80% of their focus is on you. How's your credit? How's this? How's that? Let me see your bank statements. And 20% is on the property. But with commercial, it's the reverse. 80% of the focus is on the property. That's all they care about, the income. And 20% is on you. That's why I love it. And so when you buy a property with a commercial mortgage, you can depreciate that asset so you pay less in taxes. You can do that with cryptocurrencies. Or let's say you do sell at a profit and get capital gains. Capital gains tax is actually higher than passive income tax. Did you know that? It's a lot higher. So you might say, well, you can do the same thing in real estate, Juan Pablo. That's called flipping. Yes, that's the buy low, sell high model. But when I do real estate, for the emphasis of income, like I mentioned, cash flow, I'm not selling. I'm just holding it. So passive income is taxed lower than capital gains. So I'd rather give less money to Uncle Sam and more money in my pocket so I can afford the lifestyle that I want through my real estate portfolio. So D is depreciation expense. Again, I was income. E is equity. Every time a tenant sends you a rent check and you pay, pay down the mortgage, that tenant is causing you to build equity in that property because they're paying down the mortgage for you. It's beautiful. A is appreciation. So you might say, well, yeah, that can happen too with cryptocurrencies. That's the buy low, sell high model, Juan Pablo. That's true. But if you buy an asset like real estate, you can buy based upon the market, and you can get the natural appreciation. But outside of the natural market appreciation, there's a thing in real estate investing, especially with multifamily commercial properties, it's called forced appreciation. Meaning outside of what's just going on in the market, if people are moving in or there's jobs in a new market, that increases the appreciation of certain real estate in a certain locale. But outside of that, you can force the appreciation by how you manage it. How do you make any asset more profitable, or any business, to be more specific? You increase the revenue and you decrease the expenses. By doing that, my friend, increasing rents, controlling the expenses or decreasing them by doing, energy efficient light bulbs, you have to pay for electric, water conservation kits to reduce the water bill if you have to pay for the water. Many different things that we teach in our Cash Flow Academy, right? All the strategies. That in itself will force the appreciation. Can you force the appreciation with cryptocurrencies? I'll let you answer that question, all right? So that's why I like real estate, the buy and hold strategy in particular. So I'm not talking about flipping real estate. I'm not talking about buying a piece of real estate at a low price, doing some repairs and selling higher. I'm not talking about that. I'm talking about investing. In my opinion, the buy low, sell high model is speculation. What else is speculation? Playing craps. That's rolling the dice. Because you never know if the price will actually go up. You will hope it would, but it's not guaranteed. But if I buy a rental property and I know the rents is $1,000 and all my expenses are $600, I know day one of closing I'll be cash flowing $400 a month. Especially if I factor in property management, I factor in reserves for vacancies and maintenance. I know day one of closing how much money I'm going to cash flow. So we talked about I is income, that's the the cash flow, the passive income. We talked about D, depreciation. E is equity, because they send you a check, pay down your debt. A is appreciation. You have natural appreciation, and you can force the appreciation by how you manage it. And L is one of my personal favorites, leverage. You can go into a bank and say, hey, banker, lend me 80% of the money I need to buy this real estate property. And they'll do it. And then you can go to the seller and say, hey, seller, give me seller financing as well in addition to this mortgage. And that's what I negotiate, because that's what it's called, 100% finance. You want to finance this income producing asset, real estate, 100%. And we teach those specific strategies on how to do it. And it's simple, so simple and so easy that you can do it. Whether you have good credit or bad credit, a lot of money or no money, a lot of time or no time. But out of those three I just mentioned, time, money, and credit, you have to bring at least one to the table to add value. You know, if you don't have no time, no credit, or no cash, then you have no deal. So of course, you got to bring something of value to the table, okay? So that's why I prefer to invest in real estate. Those 5 reasons: income, depreciation, equity, appreciation. Income, depreciation, equity, appreciation, just to make it clear, and leverage. Can you get all those 5 with cryptocurrencies? I'll let you be the judge. And if you guys are interested in learning more about how you can close on your first deal within less than a year's time, a few weeks even, without having cash or credit, if you want to know how to close on your first deal, my friend, in a short period of time, wholesaling, credit financing, check the links below. We have a list of modules, and we have an event coming up soon too. Just check the links below for more information so we can show you how you can get started. The cash flow coaching program is great, as well as the part about getting your first deal done, okay? The first deal done in less than a year's time using these creative financing strategies is excellent because it's simple to apply. My goal was to take all the guesswork out of real estate investing. And you've been watching my videos for a while. You've seen pretty much all of them. If you read all of our posts, you subscribed, got access to our deal analyzer. I provide a ton of information, I should say, and a bit more useful resources that I use as well, such as, well, how do you structure seller financing? What do you use? Okay, I use this note. Use this sample seller financing note, or this balloon note. Or how do you deal with a limited partner? Oh, I use this promissory note. Well, what about when you have your partners and they want to know what's their payouts since they invested with you in this partnership? Oh, I use this partnership spreadsheet. Oh, well, how do you? All those documents are included, guys, so make sure you take a look at it. It's all the tools to the trade that I use to gain success in real estate investing. And again, my main objective was to take the guesswork out of real estate investing, teaching you specifically what you need to do to get started based upon your situation. And I outlined all the specifics. So it's not just do you have credit or not, but that's pretty vague, isn't it? So in the program, I'll tell you specifically, well, this is the FICO score you need. This is the debt to credit ratio you need. This is your debt to income ratio you need. This is your debt coverage ratio that you need. Oh, and this is how you calculate this stuff. And oh, this is what it means. Let me break it down in simple terms. And also, I talk about, you know, how much time you need to bring to the table. If I say you need to bring money, what do I mean by money? Or how do you raise the capital? How do you do the financial analysis? All that good stuff, guys. So if you're really interested in real estate and you don't want another year to go by, because that's the same problem I experienced. I used to think I can just learn real estate investing and just by watching, you know, YouTube videos and so forth, get it online, or I'll read a book. But I realized a lot of stuff on real estate investing based upon online or podcasts or even some books, they only provide me with conceptual knowledge, head knowledge, just the philosophy. You know, how to get started, this and that, which was good, don't get me wrong, but it wasn't technical. They didn't tell me specifically what I need to negotiate with seller financing. What's the interest rate I should negotiate? What's the amortization period? What does amortization period mean? None of this stuff was technical. And that's what we include in the program, all the technical jargon in a simplified manner. Because I'm not going to say a technical term and then you're left clueless. No, I break it down so that you can understand it and apply it, because that's our goal in this program, is for you to understand it, apply it to get the results you're looking for. So if you're interested in learning more, Just check the links below if you want to know more about the program, the cost, and so forth, and all that good stuff. All right. So as always, guys, this is to your success. Thanks for watching. You have done so. Check out the links below. All right. Peace.